LiteFinance, the world of financial freedom.
Good morning, we have Monday, December 6th, so let's start the market forecast. Upcoming week in terms of macro events is not that promising if you compare it to the previous one. Nevertheless, we will still get a few juicy publications. Starting on Monday with the construction PMI from the UK. Next, overnight, we will get the RBA interest rate decision. Later on Tuesday, German economic ZEW sentiment. Later, IV PMI from Canada. EIA short-term energy outlook. Later again overnight, we will get the data about Japan's GDP. On Wednesday, the Bank of Canada interest rates and press conference, interest rates decision and press conference, of course. On a Thursday, initial jobless claims from the US, and finally on Friday, GDP from the UK along with the manufacturing production, and at the end, the key event of the day, which is CPI from the US. So we can clearly see that major important events will be a press conference from the Bank of Canada and inflation data from the US, which are forecasted to rise up to 4.9%, just as it did in the Eurozone. So now let's discuss a couple of things that spread the uncertainty over the markets. We see that, as I previously mentioned, the volatility on the markets started to grow across every asset class, from equities to crypto. But as for crypto, we might say business as usual, so nothing new here. First thing is the new variant, Omicron. So far, it is widely talked about in media all around the world, but nothing major to be feared, so far at least. It accounts of 0.01% of all new infections, so it is still a minor case. And only mild cases were reported, so major concern is still the Delta. Based on this, it looks like it was just an overreaction. Remember, corrections are always sudden and short, caused simply by the change in sentiment, not in fundamentals. So far, we know only about bans for traveling to and from a couple countries from Africa, like South Africa and Nigeria. But hear me out on this one. Bigger concern, and I think the most important reasons for the situations, are last Friday's NFPs and unemployment rate. Since Jerome Powell a week ago stated that the Fed might double the speed of tapering because of the rising inflation, what they needed is decent data from the labor market, and it might be that they got what they needed in order to do so at the December FOMC meeting. So I guess it is more about the tapering speed that the market is currently pricing the risk caused by that, rather than the new variant. So the key event this week naturally will be Friday's CPI data, just as I mentioned. If the data will rise according to the forecast, we might see a stronger reaction from the one currently. So, QE didn't cause the rising inflation, but they can help to cool down, we can say, the economy. Those programs ran from 2008 in other forms even since year 2000. And throughout the years, we didn't experience the rising inflation. On top of that, rising interest rates might not help to tame that, and the good example of that is Turkey. They have extremely high interest rates, and yet their currency is falling in value. The reason for high inflation are lockdowns, supply shocks caused by the disrupted supply chains, and high energy prices recently. But as you can see, energy prices started to fall in the meantime, and it will most likely stabilize at the end of the first quarter of 2022. As for the cryptocurrencies, there are again question marks about the state regulation, and executives of Coinbase, for example, among others, will testify before the Financial Services Commission. In addition, the factor I mentioned earlier also affects the crypto market. The very fact even that in 2017 and 2018, when the Fed raised interest rates, the BTC price plummeted. In addition to that, balancing losses on stocks by realizing profits from crypto also makes sense. But now let's go to the charts. Signals to enter at the moment can be found in gold and silver, and the indicators still show a continuation of the decline, although the moving averages are slowly moving towards each other, which is an alarming signal. Despite that, I will take a position, but a little bit smaller than the usual one. So then the next trade that I will try again with a smaller volume is Ethereum. We have a well-known and liked megaphone formation, and we are at the beginning of the fifth wave on the lower limit. So you can still enter with a tight stop. So this is another idea for today. On the other hand, on the euro pound, it may be time for a short. We have a harmonic pattern that would suggest us the continuation to the downside. We rebounded from the 78.6 FIBO level, and here the goal would be around 50 level, around the level of 0.8487. Okay, so and that's it for today. Thank you and goodbye.